Good to go.
All right. So, hello, guys. Today is June 6th, 2019, and let's just get into it. So, looking at Bitcoin, I'll just kind of walk through, I always like to look at the big picture first. So, kind of zooming out here to the last market cycle. So, obviously early trend, parabolic, fast crash, phase 5. And then we've been talking about the past few weeks, kind of what this price action did and what's happened and where we are in the grand scheme of things. I've been putting a lot of thought into market sentiment right now. And I see a couple of like longer term potentials. And Rocky, I kind of wanted to talk this out with you too. And if anybody has some like strong opinions about this, we can maybe go back and forth. But one thing that I kind of get a sense of is there's already a lot of greed in the market, like just in social media. And, anytime I start to see a lot of people in agreement on something, it starts to just make me question if the herd is right. And obviously we know, and we've been talking about, the potential for a much larger pattern. And, the log chart has been, let me turn these off real quick. The log chart has been a popular chart to share, just because, again, it's kind of reflecting what the bias is, which is, potential for another big up cycle. And while I think that could be the case, especially, what do we got? Like just under a year before the next halving. So the timing is kind of similar to 2016. And I definitely see the bull case that we've been talking about. What I'm trying to, I guess, kind of think through is the bear case. Is there a bear case? Obviously, there always is that you can make, right? What would that look like? And how could a bear case surprise a lot of people, right? That's just something that I like to think about. So in the grand scheme of things, I think we could be somewhere like right here. We talked about the shift from accumulation to early trend. So this certainly could be the case, right? Like in 2015, when we snapped above 300, that was the first sign of the start of a major trend. And that's kind of what we're looking at right here is the break above 6K is the first sign of an early break. So that's the bull case, right? Is we broke above 6K. If 6K holds, and then we get a follow on, that could lead us to above 20K prices, right? So that's the longer term bull case, I should say. The longer term bear case, which is the most unpopular thing to talk about in crypto because nobody really wants to talk about the bear scenario, right? But right now I see a lot of agreement in market sentiment, and it seems like the mass herd is all, I shouldn't say all, but I would say a majority of people are agreeing with that bull case, which just makes me wonder, like, okay, is there going to be a shakeout? Is there something we're not seeing? Rocky, what do you think, man? As far as market sentiment goes, do you agree with that? Do you see something different?
Yeah, it is kind of interesting because for like most of this rally this year, it was very popular to try to short and call tops, and then as soon as it goes to above 8,000, suddenly like things shift to really bullish, where suddenly everyone is in agreement that it's super bullish.
Yeah.
I kind of anticipate and expect that there's going to be some violent shakeouts, some chop, stuff like that. I mean, obviously, worst case scenario would be if it just broke down into new lows. That would be like the most bearish case scenario. That would, if it did do that, that would, like if Bitcoin did drop below 85%, for example, then that would kind of set a new precedence for it.
If it dropped below these lows?
It could possibly, it probably has a few percent more that it could give if it needed to before
Mhm.
it surpasses 85% from the top.
Yeah.
In the last cycle, I think Bitcoin hit 85%, and then the 2013 one, it was around the same percentage from the top. So
Yeah.
ultimately, it's always good to entertain any possibility, and always look at both sides, and to even entertain a possibility of a worst case, bear case scenario.
Yeah.
And that's also one of the reasons when we're kind of looking a bit toppy after a big run, I was like, well, I'm going to take a little something off the table, right? And
Yeah.
put it into the bank, just so that, like, yeah, I'm going to have to pay tax on blah, blah, blah. But, it's risk management.
Yeah.
Doesn't necessarily mean I'm bearish. But for those like, oh shit scenarios, right? It's if it did have a major crash, at the very least, at least I took some profit off, and realized some gains even on my longer term positions, right? It's kind
Yeah,
of
and,
like a
and
bit
when
of
you
a,
go up 80% over 5 straight green weeks, a pullback is very, very normal. In fact, it can be healthy.
yeah, exactly. And I've been anticipating, like, for the bull case scenario, what I would look for market behavior is a correction that maybe maxes out at 40% tops, right?
Hmm.
If we start to get beyond that, if we drop like 45%, 50, then we're back into bear territory, because or it could be a bull trap at that point, because throughout 2017, 16, we haven't had any corrections. I think 41% or whatever was like the top correction,
Yeah.
right? Typically we get a lot of anywhere from like the 38 to 40% correction. And to me, that if we did go down that far, then that would line up nicely with those two zones that you have there. So when I
Yeah.
said that I'd be looking to buy a dip at, or slightly below 6K, it could be anywhere between the 55 to 6K area.
Yep.
And for me, that doesn't necessarily mean that I'm making a prediction and saying, oh, I think the market's definitely going to go there. But what it does mean is that I'm not, for myself, having gone in a bit heavier and averaged down, sub 5K. I personally don't really have a reason to necessarily take on risk trying to catch a dip any higher than that. But if
Yeah.
the price makes it down to that level, then suddenly it looks like probability is shifting in my favor for a nice bounce play. And it's almost kind of like I'm kind of being really picky, and I'm just kind of going for those like bigger trade setups with bigger size, riding them out longer,
Hmm.
and just waiting for like the bigger plays, things that just scream at me. It might only translate to like a few trades a year, right? But with bigger size and higher probability, higher percentage probability of it playing out. So that's kind of been more to like the strategy that I've been applying more this year.
Yeah.
And so
Yeah, and
that's
I think that's smart. And one thing that Bill just said, so for anybody that doesn't know, Bill's an OG that's been with us for a long time, says two things I'm seeing. Number one, a lot of, 20 to 100K predictions this year. Number two, a lot of people talking about how much Bitcoin somebody must own to be rich if somebody owns one Bitcoin. Yeah, so like, and we've talked about the different mental models that people use to justify like super, super high Bitcoin prices. And any one of those could play out to be true. Like, I'm not saying that any one of those theories is ridiculous or false or incorrect, but they're just guesses, right? And it's very, very, very difficult because the world is so complex, and this is a global asset, right? And there's so many forces that it's really impossible to predict accurately multiple years out where prices are going to be. But yeah, the Reddit time travel. Yeah. So like, so what I like to do, and this is just my kind of mental model approach that I've found works best for me, is I look at kind of the bigger picture, right? For me, the bigger picture is what we just covered. Like I look at the 1 to 3 year market cycle and try to figure out where we are in that larger cycle. And then once I have context of where I think we are in that larger cycle, then I zoom down to a daily chart and try to find setups and higher probability entry points, right? Just like Rocky was talking about. So I agree. So looking now at kind of the immediate picture, if you will, the bull case is obviously that, right? So we get a pullback anywhere in between, I'd say, this sweet spot, which lines up really nicely, right? So we've got, call it 5,500 on the deeper side, or, I'd say call it 7K on the higher side. Anywhere inside of this yellow circle, if we had a pullback and then some kind of reversal price action, I would definitely be interested in that. However, the bear case is something to keep in mind, because this is actually, if this is just like a dead cat bounce and we're going to go back into more accumulation or more bearishness, and again, this is something that could be caused by a black swan event or, any kind of random thing that we might not have that information today. That's why it's important to play out these scenarios and think about them ahead of time. That way we're not surprised if they happen, right? Even if we'd prefer they don't happen, and even if we're going to literally bet against them happening by placing trades on the bull side, right? It's still a very, very healthy exercise to think about what a bear case would look like if it played out, right? So here's what I think is, let's say we do get a really fast pullback to this zone, and then we get like a little bit of a bounce, but then we break back below 5K. To me, that would be like a risk management price zone where I would look to scale out and minimize the risk on that, right? Because who knows, like if we dip back below this zone, we could get another retest of that low. And that at that point is more of like a 1-to-1 risk to reward for me. So I don't know, I think that's how I would play it. And obviously we got to let price action be the guide, and fast forward, anywhere from a day to a couple of months to see what price action looks like if and when it does get there. But that's just that's the bear case that I see is, okay, we had this big breakout. It went quicker than most people anticipated, right? Even myself, like I thought it was going to take more time to consolidate around 6K, but we had early signs that there was more strength once price started to shake off the two big bearish news pieces at resistance. And then there was like this violent short squeeze because shorts were at all-time highs, right? And then what I think has happened is a lot of people that were late to the game have FOMO'd and bought up here, right? Like Rock, like you said, above 8K, once we snapped above this resistance level, it's like, okay, most people, like the fear of missing out is too much for them to handle. And then they just go all in up here. And that's why, like, whenever you get these kind of bigger red days where you make a new kind of intra trend lower low, a lot of people start to panic out of that, right? So they buy high up here and then they sell these dips. So that's kind of what I'm watching for. The kind of the middle ground that I see is more consolidation. We do have, just like we had back here, we have kind of an ascending bull flag type price action where if call it the 7,500 zone can hold up and we get another bounce, we could still kind of consolidate in an upward trend here. And if that happens, okay, great. I'm not going to make any actions based on that. If we get like a really fast sell-off of, 25 to 30% from where we are, like over the course of 1 to 3 days, that to me would be a dip buying opportunity. Like if it was something really quick, but if it was like a slow bleed where it took like several weeks and we just kind of like grinded off and volume went really, really low, then I wouldn't try to catch that falling knife until we had a reversal pattern. That's just how I would play that. What do you think, Rock?
Yeah, that definitely makes sense to me. Catching that sharp capitulation candle is higher probability of a bounce versus a slow bleed and slow grind out. And usually in slow bleeds, they'll produce a bear channel and one could wait till it starts to break the bear channel, and then maybe even look for new horizontal resistance too, that it could break out of a range as well. I think if we did get down to that area and we had a bounce from that area, it wouldn't surprise me if it kind of went up to retest resistance and start to produce kind of like an ascending triangle, or at the very least a symmetrical triangle, which might produce, like if it were to mirror tail end of 2015 where it broke out of that lower accumulation, then there's about 6 months of consolidation, one level up in a new range that was established between 300 to 500, and it created a large ascending triangle. And there was like big shakeout, big bounce play, and then another shakeout with a higher low, and it just kind of consolidated. Near the tail end of that, it was really, really boring. The markets, I remember, were extremely uneventful.
You talking about 2016?
Yeah, 2016. Right?
Yeah.
Tail end of 2015 and beginning of 2016.
Yeah. It was like, this was the shift in momentum, and then we had a pullback, and then, it basically for 6 months consolidated, which led to another big push.
Yeah. And so
that's kind of the third possibility, I guess, then, right? Is like, more of a longer term, not a slow bleed where it just kind of traps everybody, but more of a consolidation pattern where it holds up, but it's low volume. And then we get that 1, 2, 3, 4 breakout here.
Yeah. And I think that option is like the least sexy option for both bulls and bears.
Right. Nobody wants to hear they have to wait.
Right. So imagine like 6 months of just some sideways chop and the market's going really still and quiet for 6 months, putting people to sleep or whatnot. So that could be well, that's what happened last time. I remember at that point in 2016, traders are so bored. I mean, I think Ethereum had some nice moves, but there were some periods where literally all the markets were just in standstill waiting for a breakout. And then once Bitcoin had the breakout, then it was rock and roll time again. But very long waiting period. Usually what happens is that, it hits a level up, hits momentum, counterforce, and then there's a period of volatility before it just kind of slows down like a coil or spring, one of those door springs. Eventually it goes still and consolidates before the next setup where there's fresh momentum. So that I'm kind of, the way I see it is that's how I mentally prepare myself to be patient. I set my expectations fairly low. Like a lot of people might look at the market, and even though a double bubble or another parabola, like you never know, maybe this is a small correction. Like if we suddenly bounced and broke out from our current levels without at least a 30 to 40% correction, then then maybe it's starting to look like a double bubble getting into maybe even a bigger parabola territory, right? You never know. But I think a lot of people would just absolutely love that type of scenario. Well, I don't know. It's weird because a lot of people also kind of sitting on the sidelines in a catch-22, right?
And this is why I actually prefer, like, obviously we'd love to wake up and have a big trade every day, but that's why I actually am okay with longer term consolidation patterns, because the moves that come after them are typically larger and more sustainable, right? Like you said, if we just say we reverse off of this zone and we have another like breakout pattern through here, the faster it goes, the more likely it is a trap, right? And like the more excitable the market sentiment is, the more concerned I become, right? Like just look at late 2017. I mean, people were in a frenzy, and look how that turned out, where when the eyeballs kind of float away from Bitcoin, and when the price isn't necessarily like crashing or dying, but it's just hanging out, that's actually a good sign, right? And because every day there's more development, there's more progress, right? There's more user adoption. So I'm okay with that. So basically, let's just kind of review and talk about what those trade setups, and I get, and again, this is my plan. You guys might want to play this differently, but this is kind of how I would play these things. So if I'm just framing like potential trade type setups, say we get, you know, again, a number one, a fast sell off where we have a fast sell off means like over 20 to 30% over the course of like 1 to 3 days. So let's say we get back down to like 6K. And then what I typically do is I'll sell like half of the position into the first bounce. So, you know, if we get a bounce back up to retest in this zone, so it might only be like a 25 to 30% trade. And then the risk you don't really manage risk on the initial entry based on a hard stop. It's more through scaling in and managing risk through position sizing, which those of you that have been through the boot camp, you know what that's all about. But the idea is whenever you're trying to catch a really fast sell-off, you're not going to know where the exact bottom is. So trying to go like all in on one order is really difficult. But that's kind of how I'd play that. Sell half into the first bounce, maybe 25, 30%. And then once you have the bounce, then you can set mental or hard stops right behind that pivot low. And then if that turns out to hold and the market keeps holding up and then it goes into a larger ascending wedge or something like that, then you have basically half of the size as a runner, right? The other one, which I don't prefer, is like a slow bleed. Like say this takes a month or two and, you know, price just keeps trapping and we make lower highs and lower lows. I would, if whenever we get down to support, I'm not just going to blindly like buy. What I'd wait for is like a head and shoulders type pattern, right? Or some kind of double bottom or some kind of price reversal pattern where we're seeing buying activity stepping in. And I would prefer to see like increasing volume, right? So like, okay, people are actually accumulating. And this one's nice because you do have time, right? Like I think it's a little more challenging for newer traders to buy fast dip opportunities unless you've been there before and you've seen that price action play out and you kind of, you have the mental fortitude to buy when there's a panic, right? Which that does take practice. So number two is nicer because whenever you get that reversal pattern, you have time. It's not like a rush. And then number three is very, very clear. You can size in prior to the breakout. You can buy the exact breakout. And I like these because these are typically my biggest size plays and my bread and butter, because when I buy, I go big and I hold for longer term profit targets. Like I'm talking multi-week, multi-month at a minimum. Where the sell-off is, it's kind of a day trade. It could turn into like a short-term swing trade. The slow bleed reversal play is more of a swing trade, but it's not as clear and it doesn't move as fast, right? Whenever you have a multi-month breakout, you can get a 50, 60, 70% move in a few days to a few weeks at the most. So that's why I like those.
Yeah, absolutely. And one interesting thing with breakouts that I've noticed with Bitcoin is that the longer the consolidation, the bigger the breakout generally.
Yeah.
So there's like a difference for anyone who's new. There's a difference. So like we had a fairly big run up to 9K. So there would be a difference between the price shooting up and breaking out tomorrow above 9K after having ran up so much with so little consolidation versus if it were to consolidate for several months or 6 months or whatever, and then break out, especially squeezing with a nice triangle type pattern. Usually those breakouts produce more sustainable momentum and make another leg up. Whereas breakouts on a market that have already ramped up considerably in a short period of time without the 30 to 40% correction, which I would consider a nice healthy correction, those get a lot riskier, and one usually has to manage a trade a bit quicker because the risk of a top is of hitting a top is a lot higher. So one example would be like we had a local top at around the 8K level, and
Yep.
then we broke out of that 8K level and went to the 9K level.
Yeah.
But it
Yeah.
basically,
So it was like showing potential parabolic, and then oh nope, another breakout, right?
yeah,
And then there's kind of your capitulation day,
yeah.
higher volume. Yep.
So that would have been, unless one had a profit target to like 9K, let's say, that would have been a trap. So a lot of if anybody were to catch a breakout on that, chances are if it didn't hit a profit target, it would have been stopped out, right? And it's important. This is where, in my opinion, this is where at least having whether they're hard or mental stops, at least having a cutoff point if one were to catch that type of breakout setup. To have a cutoff point where you do cut it off if it suddenly looks like it's trapping.
Yeah.
Whereas I've noticed, like, anytime if Bitcoin consolidates 6 months, or when Ethereum had its 6-month consolidation before its final leg up at the tail end of 2017, a lot of those breakouts tend to really go on a nice tear, right, because of that consolidation. So
Yeah. And what, I mean, if you think practically about like why longer term consolidations work better, it's because the market needs time to attract new capital, right? It's like when everybody's bullish, like they have been most recently, the everybody's in, right? Like a lot of people are in either earlier, you know, like accumulating down here when we started to get in, or they bought the initial breakout, or, you know, somewhere through here, or the final like FOMO, right? So like whenever you have price that has time to consolidate, it gives it time for new market participants to come in.
Yeah, exactly. And generally, like what we saw in 2015, 2016 is in 2015, the lows, when we had that range, we had accumulation. When we broke out of it, retested prior resistance as support and consolidated for 6 months, I'd consider that kind of like a reaccumulation phase, right?
Yeah.
So perhaps some people didn't accumulate their full size at the bottom because, you know, maybe it comes with more risk and uncertainty. After making the first higher high and higher low and consolidating, maybe traders and investors would size in more and reaccumulate. Maybe new money would come in, see that's got a bullish structure, and then start their accumulation. So
Yep.
so forth. So if we did that consolidation, to me, it would kind of be like a reaccumulation phase, which you know, usually once that's done, buyers tend to be in control because there's only so much supply one can accumulate within a zone before there's no more supply left in that zone, and it has to make another push up.
Yep, exactly. So I'm looking at some questions here. So Tom says, so you'd require 2 confirmations or touches off of 6K before you'd say it's prior resistance turn support. What I would just avoid, what I'd look to avoid is like if we had a slow bleed and then it just like broke through without any kind of like buyers at this zone. I think the probabilities of that are low, but like, yeah, if we got a double bottom or if we had like an inverse head and shoulders, but like I just don't like stepping into bearish grinding price action, right? It's one thing if everybody is like rushing for the exit at the same time, which causes a, you know, a 20, 30, 40, 50% panic in a very short period of time. Because what happens is once that panic selling subsides, you usually get a pretty gnarly bounce, right? But like if price is just slowly grinding down and like there's no signs of buying activity, I don't want to try to guess where that low is until you get like a reversal pattern, right?
Yeah, for sure.
Bill says, I'd feel much more confident after a solid bounce around 6K to really launch the bull market. Yeah. So that's the other thing, right? So the first break, this is like the first trend change, which could still be a trap, but confirmation actually comes when the low holds, right? So like this is kind of the first sign of like, oh, hey, the bear market might be over, right? but it could be a trap, right? Like that meme, like, hey, it's a trap. Like it could actually suck in buyers and then cause them pain by trapping and breaking down fast, right? That's a possibility. Where the bull market actually becomes established and confirmed is when you have a higher low hold and then it continues, right? So like that's why confirmation of like a longer term breakout would be the absolute best thing for confirming that logarithmic chart, 100K potential, right? What could happen though is like this could just be a little blip and then the market needs to bleed some more. Let's see. So Goldie says the overall market sentiment shows more usage of Bitcoin and additional companies getting involved in crypto. Doesn't this change the market a bit? So whenever we talk about market sentiment, so the fundamentals, like fundamental analysis, which is the things that you just mentioned, that's different than market sentiment. So I think Rocky would agree with me that the fundamentals in Bitcoin right now are the strongest that they've ever been. And it's really incredible. It's very, very positive. Market sentiment deals with the perception in market participants, how they perceive the value of the price, right? So if everybody's in agreement that the price is expensive, right, we want to look to be somewhat on the opposite side of like the popular opinion, right? It's like back here when everybody was super bearish, we were like cautiously bullish, right? Started to accumulate, looking for breakout type setups, right? When everybody's super bullish and prices going to the moon, we're, 100K prices. This is where we become very, very paranoid, right? Yeah. So like market sentiment and fundamentals are actually two things.
Absolutely.
Yeah. And Rocky, you've talked about that a lot, how the fundamentals right now are the most bullish they've ever been, and they continue to get better every day.
Yeah. I mean, there's definitely increasing volume across more of the legacy markets like CME and Grayscale Investments. There's just lots of industry growth and a huge user base, right? It's kind of like with any technology or with any product or service, one has to look at supply and demand, right? How much demand is there for, even if a lot of it's speculative demand, how much more speculative money can it capture in the markets, right? That's out there. And we're still, even though we've seen quite a bit of substantial growth over the past 10 years, as far as the market cap is concerned compared to other markets, it's still kind of very, very small compared to other markets.
Yeah. And this is, talking about mental models and market caps, one of the comparisons that I think is a very valid comparison is talking about Bitcoin compared to gold. And I don't know if you guys saw the debate between Schiff and Barry.
Yeah, that's
you
funny.
See that, Rocky?
Yeah.
So Bitcoin has a commercial now. That's pretty cool. But they both, I think, made valid arguments. But I think Schiff is just the kind of the old man screaming at the innovation who doesn't quite get it. But one thing that if you look at what actually helped this bull run in gold, does anybody know what that is off the top of your head?
9/11.
Well, I mean, it was a combination of things, but right around here,
the ETF.
Yep, this is where the ETF started to come out, right? So, like, let's say that, and again, this is a much, much, much longer time frame because gold's been around for a hell of a lot longer. But if this represents the Bitcoin 2017 boom. And then this could be the potential of when ETFs get approved, that's just a kind of big, the big bull case, right? Because that would give a lot of institutional players and mom and pop investors exposure that they could trust, right? And that's why I think the SEC is being so careful about it, is they don't want to approve these things and then have mom and pop lose all their money because the custodians get hacked or any one of the problems that we know about.
Yeah, and so that ETF just basically created a financial product to allow more retail and institutional investors to buy gold a lot easier.
Yeah.
And so that's really, there's still a huge barrier to entry for the average person to, figure out and safely store their Bitcoin, and risk for the average person. So that there's probably a certain segment of the population or a certain niche market of people who are interested in Bitcoin, but don't want to take on the risks of having to figure out the security around it. But if they had something that was a lot easier to purchase, that would likely entice a lot more people into that, right? Kind of get the best of both worlds, being able to do that. And, there's already some products available. I think, there's an ETF in, is it Sweden? Where is it? Sweden, Switzerland? There's Grayscale, Bitcoin Investment Trust and stuff for the OTC. So there is some that usually trades at a premium.
But just to have like at 90, I want to say it's at around 9K today. Let me see.
Yeah, and just to have like a regular ETF trading on New York Stock Exchange or NASDAQ. Because here's the thing. I've been looking at stocks that are correlated to Bitcoin and blockchain because they either do mining or there's Galaxy Holdings and so on and so forth. They have some crypto investments, but I've noticed that the correlation, it's there, but they're terrible. I mean, they don't gain nearly as much as Bitcoin or other cryptocurrencies, and they add a whole other layer of risk, which is the management of the actual company, right? So just because, or like Hive was another one. Like suddenly it's like, oh, we're seeing a bit of correlation, but now they're having internal conflicts within their company. Suddenly that just adds a whole second layer of risk versus just having exposure to cryptocurrencies, right?
Yeah, because it's like buying gold or gold futures versus a gold mining company.
Yeah.
Right. Like sometimes the miners can outperform the price of gold, but like, I don't know, in my opinion, more times than not, you're better off just buying the asset itself.
Yeah, and what's strange about
something that is a company that provides a service for the crypto economy that's completely unrelated to the price, like an exchange, right? That is a cash cow. Those things never lose unless they get hacked or, something like that. But in general, those are the types of companies to invest in, I think.
Yeah, what's strange about stuff like Hive and Galaxy is both those companies actually own a crap ton of crypto. They own a lot of Ethereum and Bitcoin and all that kind of stuff. I know Hive does. I know Novogratz has his investments and so on and so forth, and they have holdings in that company. But the price of the stock is not reflecting that because it's underperformed. Because I've been watching these very closely over the past few months. I'm interested in trying to find something a little bit more legacy that I can buy in a tax-free savings account to be able to save a bunch of money on gains. But they've been severely underperforming, so I'm really not that impressed with the crypto stocks that are out there right now.
Yeah, I'm not really interested in crypto stocks, to be honest. I mean, what Travis is doing is, in my opinion, much higher probability, like to be able to actually find like value plays. Like that's what he does. And, so that's the active side. And then the passive side is, low fee index funds. And then I think the alpha is in the crypto assets themselves. Because of so many reasons. But I think the big one that a lot of people just don't talk about is the barrier to entry and just the confusion of storing coins and the time delay in wiring money to exchanges and the time delay of like coins showing up and verifications and KYC AML, time of getting coins from hardware wallet to exchanges. Like those inefficiencies actually create opportunity for us.
Yeah, exactly. And so to me, an ETF would kind of open the floodgates. Like even myself, if Bitcoin was at the right price point, I personally would buy a Bitcoin ETF or a crypto ETF that existed in my legacy accounts just to be able to save money on taxes and such, right? And I know probably a lot of other people would be interested in that sort of thing. People probably aren't even into crypto. So that would, to me, an ETF would be a lot better than some of these crypto stocks because it would at least have direct one-to-one correlation, right? It would match Bitcoin. Who knows? Maybe it'd even have a slight premium, like we've been seeing with Grayscale.
Yeah, there'd probably be a management fee of maybe 50 basis points. Yeah, we'd have to see. Nate asked a good question. Do you see BTC as a viable institutional investment given the volatility, i.e. parabolic, followed by the big drawdowns? Yeah, I mean, I think that is the biggest or one of the biggest concerns of institutions, right, is volatility. Like you're not going to get somebody who's managing a massive pension that wants to go all in on Bitcoin, but there's Pomp talks about this, like get off of zero. So it's kind of like how most pensions have some exposure to gold, right? Like don't not be invested. Get something in the game, right? Even if it's 1% of pension, or if it's 1% of AUM, assets under management, in pensions, get into Bitcoin. That's another mental model, another thing that we could build out and talk about how many billions of dollars that would be, right?
As an interest, talking about market sentiment, CNBC was going long above 8K, right? And they were shorting a lot in the 3K zone. Forbes came out with an article when we were closer to 9K area. They said some billionaire is trying to accumulate 25% of all Bitcoin. Right. Apparently, according to some OTC dealer or whatnot, there was actually someone who's trying to accumulate that much. And you never know. It could be true.
I've heard some rumors. I'm not going to say any family names because I mean, it could be bullshit, but like I know some guys in SF that know some pretty wealthy people. And I've also heard like, some big people are like trying to accumulate a very large portion of their net worth. But until you actually sit down and talk with those people, it's all speculation, right?
Yeah, exactly. And if someone were actually serious about accumulating 25% of all Bitcoin, why would you telegraph that to the world on Forbes? Right?
Yeah, especially if you're trying to move into a multi-billion-dollar position, you're not going to advertise that.
You would advertise it maybe after they've accumulated.
Right. Yeah. Be like, hey, the Gates Foundation is now 50% of Bitcoin holdings. No. Okay. Yeah. So talking about what you were talking about, I think we talked about it this week in the boot camp class. Ignore all articles talking about Bitcoin's price like the plague.
Unless counter trading it.
I don't know if I spelled plague right. Oh, well. Listen, I don't care if it's CoinDesk, Bloomberg, CNBC. Like, maybe another way to say this is like, take any article that you see or any news thing that's talking about Bitcoin's price with a grain of salt, or even better, probably a counter indicator. Like, if anything, it's just going to like burn up neurons in your brain, wasting time reading these articles because they're just journalists that are not traders or investors. And all they're doing is writing an article because the price moved, and they're going to come up with some bullshit opinion about it, trying to get clicks for ad revenue. That's it. That's as far as it goes. They're not writing that article because they want you to make a wise investing decision. They're going to write it with a clickbaity title to get the click and people going, bright-eyed and bushy-tailed, like, oh my God, what is this article going to tell me it's going to help me make money, right? So just anytime you see any news organization talking about price, either ignore it or take it with a grain of salt, or say, why are these people potentially wrong? They're not always wrong, but Jim Cramer, his track record, I think, people track it. It's like 30-something%, right? So like, I don't even know what the people on CNBC calling the Bitcoin stuff are at, but I know we've used them historically as a counter trend indicator. So
they got like 1 to 1.5 risk to reward, and
yeah. Cool. Let's see. Oh, Don said some syndicate out of London. Do you know? I do not know that. I haven't bought GBTC. What broker is that makes you check that box? Part of a retirement fund. Yeah, I'm not sure. That's very strange that they would say that. I don't know. Are they trying to say like they don't want you to own Bitcoin and GBTC? That's strange.
Or maybe it's just telling people that they're just buying shares in a trust that owns Bitcoin versus actually buying the Bitcoin itself.
Yeah. Huh. Yeah, I would guess, Marilyn, that some brokers are going to try to avoid that as an asset just because of the risk associated with it. I think once there's actual like ETFs, that's going to be easier for most brokers to jump in. Yeah.
Yeah, when you can log into your investment account through a bank or brokerage and just buy a Bitcoin ETF, that's really going to be a game changer. I think it will produce something similar to what that gold fractal you showed. I think that's also why they're so hesitant to let the beast out of the cage.
Yeah. Yeah, absolutely. So, okay. So this is a good transitional question talking about alts. So, Dan asked, Chris, is this is the third possibility for Bitcoin the only one that could produce an alt season? So I think we should, let's zoom out and kind of talk about altcoins in general. And what that would look like. I know we've talked about this quite a bit in recent history, but it's always good to review. This is my opinion on altcoins as of right now. It could change an hour from now or a year from now. I don't know, but like as of right now, this is my opinion. My opinion is that over 90% of these altcoins are complete garbage, right? There are, how many? There's over 2,000 listed now. I expect that within the next, 3, 5, 7 years, that most of them will be dead. Especially a lot of the dApps, a lot of the tokens, right? A lot of the fund tokens that raise capital that, will turn out to either be scams or turn out to not really be solving a big enough problem to succeed. We talked about this in the boot camp quite a bit as well, about the difference between networks, and what we look for fundamentally is something unique, unique code. It's its own network, good economics behind the supply, and, just governance and stuff like that. So with that said, I am personally only interested in legacy coins that have established themselves as having a real use case, like Ethereum. I am very skeptical about clone coins like Bitcoin Cash and Bitcoin SV and all the other clones. Anything that's like centralized, like Ripple, right? And I think that's why, Tezos has been interesting because it's unique, right? It's actually innovated something that hasn't happened in crypto before. So going forward, I think the next quote unquote alt season is going to look much different than 2017. 2017 was ridiculous. It was like everything was going up. People were just throwing money at anything, just praying to get rich overnight, right? And it worked for some people, but I would say a majority of people lost more than they made, right? By having that kind of shotgun, emotional, like chasing mentality. I think the next quote unquote altcoin season is going to look dramatically different. I think it's going to be less coins. I think while a lot of coins fail and bleed out, there's going to be outliers. There's going to be, I don't know, maybe a handful, 5, 10, 20 that actually go into another big bull season. And then outside of that, so that's the already listed coins, right? So talking about new assets now, the ones that have not listed yet, I am primarily only interested in STOs, security tokens, ones that are following the letter of the law, because I think they're just more sustainable. And I think we're going to get more assets that are backed by real assets like real estate, art, equity in established companies, right? So tokenized ownership. It could be public stocks, could be private companies, it could be startups, right? But I think it's going to look different. I absolutely think there's going to be a lot of opportunity. It's just going to be more sustainable, and it's going to be less BS and less scams, which I think is just a really good thing long-term for crypto. So that's my opinion. That's what I think it's going to look like. Rocky, what do you think? What's your opinion on it?
Yeah, for me, the term alt season is very subjective. People talk about alt season a lot on Twitter and stuff, and I almost view it like it's basically just kind of like weather, or a tornado or a storm or hurricane. You have different categories. You have category 1 to 5. Recently we've seen a lot of alts move up anywhere from 2 to 500%, just in the past few months. So that in some ways can be, lower, in my opinion, a lower category, consider a lower category alt season, because they've made gains probably better than most equity markets I've seen in the past couple of months.
Yep.
They're less liquid and more volatile and so on and so forth. What we saw in 2017, and here's the insidious thing about 2017, is the reason why people are like, oh, I guess no alt season this time or whatever, is because a lot of the new round of crypto folks, a lot of them, and influencers and stuff, a lot of them came in on the 2017 wave and afterwards, or 2017. So in their minds, alt season is like 100x returns, ridiculous, right? But that was out of the entire bull trend that we've seen from 2015 till the end of 2017. That was the category 5 alt season that we've only really seen maybe at 2 points in the entire bull season, and those 2 points were in 2017. One was in the from spring to summer 2017, and the final one was the last push up when Bitcoin was at all-time highs, and they broke new USD all-time highs. And those were like 2 category 5s, but they're not common, right? It takes a while to build up to that level, in my opinion. So we're seeing much later alt seasons. But if we were to look at the entire market cap of altcoins, in my opinion, it's just forming, like right now, it looks like, it's forming an inverse head and shoulders, right? It's showing a very, very early stage bullish setup, right? Early reversal pattern. And so we haven't seen any of the really crazy parabolic runs. Most altcoins, even though they've been making higher lows, even though a lot of them broke out of the lower accumulation range, even though a lot of them went up 2 to 500%. A 2 to 500% rise off the bottom after things have bled out 95% is not much, right? It's not a big move. It's a big move. Yes, if you make some money and you triple your money or whatnot, for sure, it's a big move. But compared to the larger cycle, it's still peanuts. It's still much closer to the lower end of the spectrum. And so I think like a real alt season, in my opinion, to get back into category 5 alt season, in my opinion, I think we'd have to see Bitcoin break all-time highs again, right? I think it's something that would happen on the next all-time high cycle. Now, we could certainly be lined up for like a nice category 3. Maybe we start seeing some 10Xs, right? And this is all just kind of subjective, but that's kind of the way I view it based on, it's varying degrees of ferocity for alt season markets. Lower category would be like, the lower categories would be like a double or triple type of thing. And, once you start getting to 10Xs, I'd say that's like kind of mid-range alt season. That's certainly pretty big moves, 1,000% moves. But when you get into anything that starts to produce like 100 to 1,000x, ridiculous things like that, that's something that generally, from what I've seen, take years to get cooking. And there's no guarantee that some of the top larger cap markets like Ethereum, for example, would actually pull off another 100x, because you got to look at, well, how much growth can this market cap actually take, right? For it to do a 10x from here, you're looking at 250 billion.
And I wouldn't, we've kind of used the total to basically the total crypto market cap excluding Bitcoin as kind of a guide. I don't think I'm going to use this chart as much in the future. This is just my guess. Because I think a lot of the coins, as they start to fail, is going to pull this chart down. So instead of like really caring about or looking at the total crypto market cap, because look, I mean, the reality is there is $100 million, 10 to $100 million market caps on a lot of coins that I think have a 99% probability of going to zero, right? So what's that going to do for the total market cap? I think it's going to pull it down. What I think I'm going to be more interested in is maybe if we can make our own market cap or our own like total chart of the coins that we think are going to have the highest probability of success, right? Like that'd be kind of interesting if we could create some kind of index or some kind of like chart where we add 5, 10, 20 that we think are higher probability and then track that. I'd almost be more of a fan of doing something like that.
Yeah, that's an interesting idea for sure.
Yeah,
absolutely. And then there's also what increases overall market cap too. Sometimes there's also new projects that come out of nowhere that end up with really large market caps. So an example would be the BitTorrents one, where Tron just bought BitTorrents and tokenized it, right? Like, where is that in market cap right now? I think that's at least in the top 100, if I'm not mistaken. Is BTT ticker.
Yeah, it's 33.
So you get these random variables like that, and suddenly just added 260 million or whatever to market cap.
Mm-hmm.
But then you have these other market caps that are a little bit more hot air. Like, so I just saw this coin today called Bitcoin 2 is pumping and just reached a high market cap on extremely low volume. I think it passed the market cap of BitTorrents, Bitcoin 2, but look at the volume, 82,000 or 100,000 in volume. Right.
And how much of this is real? Let's see. Wah, wah.
Yeah, like exactly.
Yeah.
So then you have something like that market cap, which is just hot air. It's like, oh, sure. Yeah, that's definitely a $250 million market cap on $80,000.
Right. Yeah, that's the thing, right? Like
incredible.
$500 million.
Yeah.
And it trades 100K on whatever these exchanges are. Right.
Yeah, so that's just like absolute BS. That's hot air. right? You'd be lucky if you could cash out $10,000 of that shitcoin without crashing the market, right?
Yeah.
Like,
Yeah. And look, I mean, whenever it's like two like little BS exchanges and then you got these price differentials, it's like, yeah, that's not liquid at all. You got to be real careful about that stuff, guys. That's why we only trade liquid things. Yeah.
It did go up 2,700% on one. If you would have put one Satoshi's worth of Bitcoin in there.
Right. Okay, cool. So we talked a little bit about the bigger picture. We talked about Bitcoin, talked about, our view, like the bigger picture of altcoins. Let's talk about, I'll do this. So I'll just share my charts on a couple of alts, and then Rock, if you want, I'll pass it over to you.
Sounds good.
Cool. So I marked up one of these. Here we go. So let's talk about Ethereum. So Ethereum, one that we had a decent breakout on. So let me just kind of read my watch list that I sent to you guys this week. I said, as we've been discussing for a few weeks, most alts are following Bitcoin at the moment, meaning like they're just kind of, if you look at this price action right here since the breakout, it looks pretty similar to Bitcoin, right? Meaning like you got the breakout, got some consolidation, and they're both kind of holding like higher highs and higher lows at the moment. But for the most part, it's tracking, if not a little behind, right? Like this breakout actually occurred when Bitcoin was topping out initially, I think at 8K, which is why I bought there, because of that capital flow reason that we've talked about for a couple of weeks, where when people start to sell Bitcoin, they don't all sell back into fiat. Some of them will flip into Ethereum and other altcoins, which is what gave us that pop. So we got the breakout. I closed some around 265, just been watching. And then in the watch list, I continued to say, I was looking for some of these high market cap altcoins to start moving inverse to Bitcoin, but the market feels like they're trading very cautious, right? Where like in prior bull cycles where we've seen like Bitcoin will have a big gain of 50 to 100%, and then it'll sell off, right? Like it'll do a fib retracement, and then you'll see Ethereum pop completely inverse to it, right? Like that's happened quite a bit. We haven't seen that this year. The market to me is just trading a little bit scared, a little bit more cautious, which look, I'm not surprised to see because we're on the backside of a massive bubble, especially in Ethereum, right? Like this price action was driven by the ICO boom. So there's a lot of selling pressure in this because there's so many like ICOs tied to it. So the fundamentals of Ethereum are just kind of, they're dramatically different to me than Bitcoin, right? Bitcoin's very simple. It's very pure. It's, it is what it is. Ethereum, you had so many ICOs that have tied their tokens to it that it just creates a different dynamic. And because we don't have as many new coins being listed, you can see the move, the breakout didn't yield but about half of what Bitcoin did, right? So like on this breakout, we got about a 50% move, where on Bitcoin, we got about 100% move, right? So from the initial breakout of 4K to basically 85 or 9K, right? So this was basically a double, where Ethereum got into the first resistance area, and it's just kind of struggling here. So I'm trying to be patient with it, and it would be nice if we got another push to 400. That's kind of my ultimate target on this, is if we can get to 400. But if it collapses, if it rolls over, and you can see already the volume is just kind of declining on it, it's not really going anywhere. So we've got declining volume, where on the breakout we had increasing volume, things were looking great, and then it just kind of like, it's still holding up, but it's very, very close to a breakdown level. So So what I continued to say in the watch list was, there's a bit of support around 230 to 240, and I'll likely take a graceful exit on my remaining position if we can't hold up. Meaning, like, if it rolls over and, we can't hold this support zone, I'm just going to take a graceful exit, hopefully, catch a little bit of a profit on the remaining size, and then just wait for another setup. Because at this point, you can see we're facing the red wall of death, right? There's a lot of bag holders that bought above these prices, right? And it goes even more insane than that. So there's a lot of bag holders in Ethereum that bought all up in here, right? And so typically when you have that, the first push, the first kind of trend change, you get sellers because people are like, okay, that reduces my pain a little bit. Let me go ahead and sell and just get out, right? So that's what causes the selling. So in my opinion, we're going to need, for this to hold up, we're going to need another kind of quicker pop to the upside in Bitcoin, which again, that's a possibility, but that again kind of puts us in parabola territory. So I don't know. I'm not too confident in Ethereum right now. That's just kind of my gut and through experience and what I'm seeing. I'm still holding it, and it would be nice if it worked to our next zone. But if not, again, that's something I don't have any control over, and it is what it is. So that's my opinion on that. What do you think, Rocky?
The biggest bag holders in Ethereum are those ICOs. Right?
Yeah,
and they're not just regular bag holders or whale bag holders. I kind of tweeted something cynical in 2018. I said, the altcoin markets will stop dumping when ICOs are finished dumping their free tokens on you, right?
Yeah.
And
which who knows how many are still holding like it. I don't really communicate with them, like it'd be nice to have an account of all the ICOs tokens and where they're at.
Yeah, and that's kind of the sad thing, and that's why some people think that altcoins are scammy. I'm not necessarily. I think there's a lot of scams in altcoins. I'm not necessarily the mindset that they're all scams.
You're not a scam maximalist?
No, but there's definitely something to be said that if someone just prints out tokens out of thin air and suddenly has a high market cap, and they've got all these free tokens and they raise all this money, that they're just gonna to pay for costs and stuff for their business. They're gonna keep selling tokens, right?
Yeah.
Ripple till this day is still selling their tokens. This is like, you can almost consider that the longest ICO in history. There's still, I think they still control like 50% of all the token supply, and they're just every month they're selling millions and millions of them, like every month, right?
Yeah, what an interesting experiment on Ripple, man.
Yeah,
you made good money on it, but
it's not security.
Right.
There's been a lot of backpedaling in their literature where they're trying to say that XRP has nothing to do with Ripple company and this. I don't know. They're trying to.
Interesting.
Anyways, probably trying to get around securities laws because.
Yeah. So if anybody's wondering what these green lines are, I think maybe a month or so ago, I guess maybe around here, somebody was asking like, would you ever buy Ripple again? And like, my answer was like, what I would want to see is a move like this where we challenge prior resistance and then we break up above it. So like I wouldn't buy any more of this until we got at least there where we did a 1, 2, 3, 4 breakout above prior resistance. Cause like it could just flatline and continue kind of selling off here. Kind of like Polly's done. Where once you have a coin that starts to make these lower lows and lower highs, like the worst thing you could do is try to guess where the low is going to be. It's like, you don't have to guess. You can just wait for confirmation of a shift in trend. right? It's much easier and much more profitable and less stressful to do that than to try to like go barrel bottom fishing and guessing when bearish price action is going to reverse.
Yeah, that one's still making lower highs.
Yeah. Oh yeah, we've got BitConnect 2.0. When are we launching that, Rocky? Have we picked a date for BitConnect 2.0?
I was gonna launch it in Amsterdam, right at the Space Cake shop, and
Oh man, we'll get you on stage. Hey, hey, hey. All right. So the final one I was going to talk about is XTZ. So this has actually just been a really interesting use case for, price action and fib tools. And, so to give a little context, they did a ICO at 40 cents, launched on the exchanges, sold off back to supply levels or support levels. Then we broke out. I started buying my first position here, then added on the breakouts. We hit kind of I consider this the all-time high on 180. So that's Bitfinex. If we look at Kraken, obviously we don't count the red death listing day candles because nothing traded at that price. So I would call the all-time high on this one about 150. And so it spiked up above it and then trapped. Here's what happens whenever you start to get an early coin. And actually, let me just kind of clarify what I said in the trade alert before we do any price analysis. So moving on to this, one thing I said is the news event that happened on the 29th here, their release was basically a non-event. And, Rocky basically said it turned out to be kind of a sell on the news thing. And then as soon as we broke below $1.50 here, we started to see some selling back to the next support level. So we're getting a little bit of a pop today at 110. But one thing that I said, and I kind of want to really drive this home. I know we've been talking in depth about this for several months now, but newer altcoins like this one, this is just a really good example. Newer altcoins that are, say less than a year old on exchanges are usually more volatile, meaning they make bigger percentage gains and losses than Bitcoin because they are so new and because they haven't had price discovery yet, right? And which means that they require more patience, right? Like an accumulation style early coin, it could take several months to more than a year for it to pop off, right? And an example that we kind of just talked about was Ripple, where I think, man, when did they list initially, Rocky? Was it 14 or 15?
I think remember. Ripple 2014.
Yeah, 14. Yeah, it was like one of the first ones.
Maybe even the tail end of 13.
Okay. Well, anyway, I think we started to accumulate it, if I'm not mistaken, in 15. When it was around a half a penny, right? And we were just watching, kind of accumulating at the lows. And every pop that happened, it kind of got sold into. It took over a year or two for it to hit a full bull cycle. And it went from like, call it a penny to 30 cents and then had a deep pullback. And then from there, had a 6-month consolidation period, and then we had another breakout trade at 30 cents. So where we were taking profit became our second entry, right? And then we rode that up to the CNBC $3 target. So that's just how weird and volatile early coins can be, right? And they also have a higher probability of failure because they are so new, right? Like they could get hacked, their code could fail, the insiders could break up, problems, right? Like there's a myriad of issues that could happen with newer projects. That's why I think it's just really important to understand what you're getting into. So with that said, like I'm still being patient with this, like, if this were a couple of years ago, I'd be trying to maximize every little like run and retracement and extension. But I'm still being patient. So the thing that happens though is as price develops, if a trend stays intact, is prior fib extensions become one run. So it's like if you get, say you get a run and then you get a 50% retracement, right? Like that. And then you do 100% extension. So you have nice price action, right? So you get that 100% extension. What happens is this completed extension becomes one run, right? And then what you can do is you can get a 50% retracement of that run, right? So like a pullback like that. And then the price patterns become larger over time, right? So you'll whenever a trend starts, you'll get these smaller run, retracement, extension, run, retracement, extension. And then once you have a bigger pattern, then that whole run becomes one leg of a future retracement and extension. Does that make sense, guys? Everybody with me on that?
Yeah, absolutely. That's when we start to see the size of the candles dwarf the previous size. And I would say, yeah, exactly. All those little runs and retracements to me over the past several months, to me seems like one bullish move, right?
Yeah.
One major move. So having a deeper correction, maybe some consolidation would be fine, for another possible leg up. And even if it drops, sometimes it gets choppy. Sometimes coins make full retraces. Sometimes they drop all the way back down. There certainly seems to be a lot more happening in Tezos, a lot more going on for it than there was at the lower end of accumulation, where it was more in stealth mode. So there's certainly a lot. They recently proven that they can do what they set out to do. So they had their first on-chain amendment of the protocol.
Yep.
On-chain voting. It went smoothly. There wasn't really a hiccup in that. Naturally, we saw some selling. A lot of the selling is being correlation. We didn't see a massive dump on the day of the news. Small selling, not a huge dump. But I think a lot of this recent sell-off has been getting swept up in the overall market, the correlation. And then also some people they sell because the hype kind of fizzles out a bit. They're like, okay, they hit this climax event, this big event, whatever it is. And then it's like, okay, what now? Right. So, but we're definitely seeing, so it's kind of proven itself and made a major milestone on its fundamentals, which is kind of important. We take for granted that it could have went wrong, right? I mean, there's been lots of experiments that went wrong, like the DAO with Ethereum went horribly wrong, and Ethereum's had major hiccups and problems that went wrong, and so this actually went fairly smoothly. So had it glitched out and you realize, oh, for whatever reason this doesn't work, you can't have a self-amending blockchain because it's never been done. I mean, they've been testing it on testnet and stuff, but which is a bit different than going live. But now that we know that that's being done, the envelope's going to get pushed a little bit more, right? They're going to start voting. This is a very easy test. The tests will get harder and harder. Eventually, some of the tests, you might have some conflict in the community about who wants to vote for what or whatnot. Everyone's kind of, it's very early in the game now. Everyone's kind of singing Kumbaya in the game now. But as it grows, the more an ecosystem grows, the more participants that come in, the more probability there is for conflicts and stuff, right? So that'll be interesting to watch, to see how that develops and how the voting process and decentralized governance plays that sort of thing out. And if it, for some reason, if there are any types of conflicts and things go smoothly based on this governance model, then it'll actually set precedents where other blockchains have failed, in my opinion, right? Like, Bitcoin's great and Ethereum's great and all that stuff, but they've had major splits and failures in their governance models because of conflicts and the process of being able to come to conclusions, right? To me, being able to just vote with your money, be like, listen, I'm a majority stakeholder, or I own a lot of this, therefore I get a bigger vote because I'm more heavily invested in it. Voting for protocol changes can be a lot smoother, in my opinion, and would be an evolution of blockchain versus flame wars on Reddit and Twitter and just people like trolling and memeing each other as a means to come to consensus.
Yeah.
Right. Or backdoor corporate dealings, right? Like we saw with B2X and just all the drama we saw in Bitcoin, and even a lot of the drama we saw in Ethereum and such. Unless it's like a super highly centralized project where, and I'd say those two projects are probably a lot more decentralized than some of the newer ones. So that would be interesting to me, right? Can we come to consensus harmoniously without a ton of drama, right? Can we just upgrade, be adults and upgrade a protocol without necessarily having to fight tooth and nail with the adversaries or whatnot? So it's all an experimentation. I'm certainly, after having witnessed years of infighting and still infighting till this day in crypto, I think any type of on-chain governance and at least experimenting with that is certainly an evolution that needs to happen, right? Otherwise, it can get too much of a tight-knit cabal that controls everything, right?
Yeah, and that's the potential reward and the risk, right? It's like, if this catches on, if this becomes like a problem that people or a solution to a problem that people go, hey man, they nailed it, this is the way to go, that's where the reward comes in. If it breaks or fails or just loses favor, that's the downside, right? And so the actions of the market participants are reflected in the price action, right? So we can see kind of the general behavior of the people that have skin in the game here. And it's a big if, right? I mean, that's what investing and trading is all about, is looking at the data, weighing the pros and cons, using the charts to kind of map risk to reward and entries and exits, right? And so one thing that I'll just kind of say before I wrap it up is, right now, I think the markets are trading scared or cautiously, right? There's just, it doesn't feel like euphoria, which I think is a good thing. And it doesn't feel like panic, which I think is a good thing. I feel just cautious optimism, I feel like, is kind of the market sentiment. And so what we see though is a lot of alts will track Bitcoin, right? So like over the past like 72 hours or so, you can see this pullback kind of correlates with this pullback, right? So we got a few days of selling. We also got a few days of selling there. So whenever I see that, and whenever I see that Bitcoin is quote unquote overbought or potentially due for a larger pullback, I just become more cautious on, say, like dip buying opportunities and stuff like that. So like, for example, even though we're a support here, I'm not buying this right now. I think there's more risk. If we got a reversal pattern and something kind of larger to play out, I might entertain that. But let's just talk about the price action and kind of the bull and bear case. So the bull case first is, if you kind of look at this example, you can see this is exactly what I'm kind of marking up here on XTZ, which is we've had some completed extensions. If you look at this as one run to the upside, we've made a 50% pullback, right? We have around kind of emotional price level of $1, right? $1.10 that's holding up right now. If we bounce off of this and support holds and we run an extension from this low, so if we do an anchor to pivot high minus that retracement, you can see that puts us at about 275, $2.50 to $3 on a 1-to-1 extension. So that would be kind of my first target zone if we broke out to a newer high or a new all-time high. And just for good measure, let's just do Bitfinex as well, just to make sure that kind of lines up. So that would put us at, yeah, about $2.50 to $3 as well, 260. So this is the thing, is whenever I run extensions, you don't know if that's going to play out, especially like whenever you're at the low. Like if it moves off of that and it confirms that this is the pivot low, but it might turn out that like we go to the 61% or even deeper, right? And then we adjust those targets. But that's kind of how I use those. The fib extension tools are dynamic, meaning like when you draw them, it's not like they're set in stone. You adjust them with price action as price action moves forward. So
absolutely. We have one question. Couldn't someone with big money and their own plan for XCZ go around buying up all the biggest bakers as well as accumulating XCZ on the exchanges and thus take over and centralize the project? Sure, that's certainly a possibility. But in doing so, they would need to buy up a lot of the supply and hence drive the price up, right? Because there are some people who aren't going to part with their coins under a certain price point. So there's actually a finite amount of supply within each price point for any market.
Yeah.
Once that supply is being absorbed, if there's continued demand, then that's generally what pushes the price up higher. Most people will have a selling point, I would assume. Some people maybe not. Some people will just hodl through it all every cycle. I'm sure some people never sold any Ethereum and maybe bought in on the ICO. There are always those types of people as well. So yeah, that's certainly possible. Now, what's interesting is, can they 51% attack it and manipulate it for malicious gain? I would say no, because they would have to lock up 10%. And if they game the system, they can lose 10% of what they put in as a kind of like a bond, a baking bond or whatnot for their staking. So yeah, that's certainly a possibility for sure, but they'd have to pay for that control, right? And I mean, if that were to happen, then in a sense, that would also kind of be a win anyways. I mean, yeah, it might be a failure for its decentralization, but it'd certainly be a win as far as the pocketbook's concerned. Right.
Yeah. And that's where economic incentives kind of line up, right? Is like, if you do put so much money into a project, you are economically incentivized not to screw it up.
Yeah. Exactly.
Cool. All right. So those are the ones. Let me just take a look at BAT. I haven't been focused on this one too much recently. Yeah, just kind of consolidating. We've got multi-month resistance here through 50 cents. Again, this is kind of a speculative play based on the fact that Brave might gain market share over time. I don't know. This could go to zero. I don't have a huge position in it. And that's pretty much it, guys. So hope that's helpful. Rock, I'll go ahead and pass it to you, brother.
Sounds good. All right. Can everyone see my screen?
Gotcha.
All right. So someone had asked about a candle on XTZ Euro. Not sure whether a long bullish wick is bullish or bearish. So let's just look at that for education. So let's see, Euro. So you're referring to like the 1D. Generally, when I see, hammer candles at support, preceded by large green candles after that, that's kind of like engulfing. That goes up a lot higher than that. Generally, that's like an early reversal sign, right? That's certainly bullish. Just like if you see like a doji, like what we saw in Bitcoin at the 9K level on the 1 week. And I really like the higher time frames, like 1 week and the 1 day candles. So here, this is kind of like a transition candle. It tends to be reversal candles when you have them at resistance, right? Or at support, right? You could have the opposite. If you saw this at support, then it could be a reversal. But this was kind of like, to me, an early warning sign. And I'd warned people last week. I said, let's watch to see how this 1 week candle is going to close. I said, I'm not doing anything until I see how that candle's going. So that I decide, well, you know, there's kind of a high probability it's going to see a bit of a correction here. And that's when I decided to take some profit closer to the 84, 8,500 area, my first take profit for the year. And that's just like, to me, we had a big correction. We chopped around for 6 months and the markets were uneventful until 2020 or whatnot. You know, would now be a good opportunity to skim a little off the table, put a little bit of money in the bank as my first take profit for the year. Generally, when I take profit, it's nowadays when I take profit, it's a decent chunk, right? It's a decent chunk of change. But I still have a good solid majority of my overall positions for a larger move, a larger cycle. But you know, if we chop around, or if we have a even larger correction than anticipated or whatnot, then I'll be happy that I took something off the table, that I took a little something off the table. And I've been fairly patient all year. So that's kind of my reasoning with that. Someone asked, did I short it? No, I didn't short it. So I basically just sold on spot, and then pretty much withdrew it straight to the bank. Not necessarily, I'm not holding anything on the exchanges. If I see a big enough dip or whatnot, maybe I'll long it on futures, or maybe I'll convert money from the bank back into the exchange. But I'm really, we're at the lower end of the cycle. I'm really minimizing counterparty risk as much as possible.
Why would you do such a thing?
You know, you take one hit on the chin. You know, if someone, like, you're in a boxing match and someone hits you with a right cross, you know, and it knocks you down a little bit, you might be guarding that side a little bit more as you get up, right? So to me, it's like, okay, I dodged a bullet for long enough over the years. I've dodged many bullets, Cripsy and all kinds of them. And this time
did you get bit by the Bitfinex one?
Not really. No.
Okay.
No, actually, I think a little bit. Yeah. Nothing huge.
That's good.
With Quadriga, it was a little bit bigger. It didn't knock me out of the game or anything, but you know, it's definitely a good chunk of change. I diversified my risk by having on multiple exchanges. If I had it all on that one exchange, would have been a much bigger hit.
Yeah.
So I'm just managing that risk. And to me, it's not a really huge problem unless the overall larger markets are parabolic. At which point, if one were to take profit, like let's say in the next cycle, we end up in a massive parabola like this, I wouldn't just cash out all at once. I would probably have to stagger, and you know, maybe a bit once it crosses a certain point in the parabola, you know, probably like once a week, sell chunks into the bank, wait for that to clear, sell another chunk, so on and so forth. That's kind of the lower risk way of doing it, because even if one says, oh, well, I'm only going to keep it on the exchange for all of but a day, and then I'm going to withdraw. You have to usually wait a week before you see your money. If you did that, probably some people on Quadriga that were just trying to buy a Bitcoin for the first time before the hack, whatnot, and maybe they didn't have their money sitting on the exchange at all, except for that one moment.
Yeah. Rock, I think you're cutting out a little bit with
so if one's gonna do a, oh, okay, my bad. You know what? It's probably because I'm doing screen sharing.
Yeah, if you want, I'll take.
I'm tethering off my phone, by the way, because had to Sure, sounds good. I'll pass it. I'll
Cool.
pass it back to you.
And then, yeah, if you have any links that you want to share, just let me know.
Sounds good. Yeah, there's let's go into news.
Yeah. How's
Since
that, guys? Is that better?
we're up on an hour and a half, so I'll just share one interesting link in the chat with you that I thought was interesting. Basically, it's just Samsung betting on big or getting into Bitcoin mining. So that's interesting. Producing, manufacturing, mining chips. I think it's a big company. It's kind of like a legacy company. So that could certainly shake up the markets a little bit. It's also showing that um, Bitcoin is still headed towards mainstream adoption. When you have these mainstream legacy companies getting interested in it, whereas like in the old days, any Bitcoin company was just a startup. There was like zero interest from any large legacy companies, right? It
Mm-hmm.
was all just startups, and a lot of them were kind of fringe, and a lot of them failed, like Butterfly Labs and stuff like that, right? So when I start to see stuff like Windows building a decentralized ID system on Bitcoin blockchain, and then Samsung manufacturing chips for Bitcoin, and so mining chips, and when I start to see moves like that, to me it shows that there's big money, big guns in the legacy markets that are placing bets. They're putting their chips on the table, and they're trying to seek some profit. They would only put their chips on the table. It doesn't necessarily guarantee that they bet right, but it
Yep.
shows when enough big players start betting their chips, they're not just pure speculators, they're also market movers. They also do have some control over the direction of the overall growth in industry, right? So what happens when Microsoft builds, and I think Bitcoin was added to like Excel and stuff like that too, right? As the default, as a part of the default options and currency stuff like that.
Mm.
So it's just showing more mainstream adoption. But let's say they build their decentralized ID, or Samsung builds their manufacturing chips. What happens when a huge legacy company builds a product or service? What comes next? Well, they have to advertise that product or service.
Yep.
Oftentimes they advertise that product or service, and they have billions of dollars to go into advertising it, usually to create market demand and find new customers. And maybe those customers might not be in the existing pool of users. We think about, there's probably still not a huge chunk of the population. Maybe I don't know the stats. Maybe there's like 50 million people using crypto, maybe less, or maybe like 20 million or something like that. So they're probably placing chips on the table. That is a much bigger market. But suddenly you start to see TV commercials advertising Bitcoin from Microsoft or something like that. It also gives legitimacy to it, right? That type of legitimate, like for regular retail investors and such, when they see big names like that backing something, suddenly all the scary early fringe history of Bitcoin, the Silk Road, and oh, is it legal still? Suddenly that gets all washed out. Suddenly the question of legitimacy and legality kind of get erased out of people's minds, and when bigger players and more mainstream legacy companies get involved, and financial institutions get involved, right, and offer that.
Well, and here's the thing too. So if Samsung comes out and puts the hardware wallet in their phones, which I think I was hearing this correctly, that they're actually going to do it right and have like a separate chip or whatever for the hardware wallet. So if like your phone gets hacked, like it's still secure. If they do that right, and like other phone manufacturers do it right, that means in maybe 5 years, Apple will do it. Maybe
Yeah, for
5
sure.
years. Yeah. So
For sure, yeah, and yeah, if they did an isolated chip, kind of similar to like having a Trezor, but in your phone, then again, that's just another on ramp for mass adoption. I mean, the Samsung phones are very, very popular Android models of phones, right?
yeah.
They're like one of the most popular Android models out there. So to me, that's just one step in that direction, right? Towards onboarding. So I like to see news pieces like that. Fundamentally, it shows a lot of strength, in my opinion.
Yep, it's good stuff, man. So, anything else going on development wise? I think other than that, kind of a quiet week.
Yeah, just
check.
I haven't seen too much that's been standing out.
Yep. Oh, Facebook is going to be, I think they're launching or at least announcing their global coin or whatever this month. And then let's see what this article is. This just hit.
I saw, I think it's pretty funny. Someone tweeted something I thought was funny. Basically, Zuckerberg was consulting with like the IMF and some central banks about his new Facebook coin. Yeah. And someone tweeted, I don't think Zuckerberg has the right idea about crypto. Right?
Apparently it's only going to cost $10 million to run a node, so we'll see about that.
I personally, I don't even have a Facebook account, so I'm glad that they're getting into crypto, but I'm not, I'm not excited unless it supports the current ecosystem somehow.
Yeah.
If it's just trying to basically put lipstick on a pig and repackage some old shit for us, more very highly centralized. Yeah, it could take on a huge market share because they obviously have several billion users. So if they can make payments within Facebook, then that'll certainly generate a lot of commercial activity for sure. But to me, if it's a highly centralized project, I don't get that excited about it unless it has some kind of confluence with Bitcoin and decentralization. If they want to have their centralized coin, but they're somehow onboarding into decentralized currencies, or if it somehow helps promote Bitcoin or decentralized cryptocurrencies, then certainly I think that would be good. But if they're just trying to create like a PayPal 2.0 with blockchain attached to it, then that doesn't really excite me that much.
Yeah, we'll see how that plays out. I'm definitely not gonna be running a node anytime soon. Doesn't look like. Oh man! All right. Well, good week, guys. Hopefully everybody's clear on kind of the view and the possibilities, probabilities, and plans of some of these top coins. If you guys have any other questions, feel free to chat us up in Discord. And yeah, that's all I have.
Same here, folks. Have a great weekend. Happy Friday tomorrow. All that fun stuff. Let's see what the week has in store for us. It's always kind of interesting waking up every morning to see what the price charts and everything's doing. So each week, so on and so forth. So have a great weekend, folks. Take care. Cheers.
See you guys.